Hey everyone, welcome to the KE Report and a company update from Heliostar Metals. A lot for us to talk about. One being recapping the Q4 financial results that were just released now that the company is a producing gold company generating cash flow from their assets. We're also going to talk 2025 guidance, and all tied into this is the full repayment of the debt that the company had to take on some of these Mexican assets from Florida Canyon Gold, which was Argonaut Gold, as well as some drill results from the Ana Paula Project. So a lot for us to get to in this interview. We are chatting with Charles Funk, President and CEO of Heliostar Metals. Company is traded on the TSX Venture Exchange under the symbol HSTR, on the OTCQX under the symbol HSTXF, and the Frankfurt Exchange RGG1. Charles, let's start with these financial results then, because look, this was a major transition for the company, turning into a producing company last year on the back of acquisitions. The company generated, just over $9 million of cash from production from early November through the end of the year. This also grew the company's cash position, and you paid down the debt that you acquired to take on these assets. Charles, talk to us about now being a cash flowing company, and even more importantly, what we can project out for 2025.
Yeah, thank you. They're an incredibly strong quarter, or sort of almost half a quarter, given that we only reported from the transaction closing in early November. 50% margin, $9.5 million mine operating earnings. We grew our cash position to $7.7 million. The power of increased production combined with an incredibly strong gold price. It's why producers are re-rating like they are at the moment.
Yeah, it's a nice thing to see the production coming into that strong gold price. Let's talk gold production. This was the fourth quarter, really the first time you had numbers out. You did produce 5,429 ounces in Q4. That's from the two different mines. Walk us through what's going on with La Colorada and San Agustin.
Yeah, so that extrapolates out for the entire year of last year of just over 20,000 gold ounces that we produced as a company. It's operating, both of the gold productions came from residual leaching from each of the operations. La Colorada was in residual leaching the entire time, and San Agustin moved into it late in that period. And so what we needed to do looking forward was then restart and start expanding that production. And so good production, high margin production last year, and going to an increase in production plans for 2025 at both La Colorada and San Agustin.
Let's talk about that production then, because look, as you said, some of this is re-leaching. So when it comes to the restart of production that you have a table within that recent news release that outlines the 2025 guidance here. I will post that within this interview posting below the interview. Take us through what the key drivers are going to be here, and just reiterate what you're expecting cash flow to be for this year.
Yeah, so we expect to expand production to 30,000 to 40,000 gold ounces in 2025, so double what we achieved last year. Our costs will move up because we're restarting operations. So long term, we're probably going to be around 1,800, but starting from La Colorada and San Agustin. But because we're restarting in the short term, they'll be a bit higher. So still probably making $800 plus margin per ounce at the moment, which is incredible. And we'll be able to stabilize and reduce that AISC cost over the course of the year so that it should further improve for the company. And when we bring Ana Paula on, it should drop markedly. So increased gold production at an AISC price that will continue to drop from where it is today. And we think that should set us up to produce, somewhere in that 25 to 50 million of cash flow, depending on how aggressive or conservative you want to be on the gold price. And probably more importantly, we're going to reuse that capital to grow our business and further expand production beyond that into 2026 and 2027.
One more quick question just on gold production and those costs throughout this year. As you said, the cost should be coming down throughout the year. So give us a little bit of a lay of the land. I don't want people to be surprised maybe at Q1 numbers that might show higher AISC costs than what you're expecting year round.
Correct. So we'll be up around $2,000 an ounce for our ASIC this year. The reason we'll be at that higher price is because we've restarted production at Colorado. So we have costs for a number of months before we start to see that gold production. And then in the back end of the year, in the last quarter, we're going to restart production at San Augustine. So we have a whole series of one-off costs that won't sustain in our costs. That'll give us that higher number. The technical reports support sort of life of mine 1800 ASICs. Will be above that due to the restart costs at both San Augustine and La Colorada this year.
Well, Charles, just to that point about expanding things, you've been busy with the drill bit as well at the El Creston pit at La Colorada mine, and this has been a successful program. Walk us through how you can continue growing the resources there.
Yeah, the incredible feature, all three of our main deposits have open resources. And at La Colorada, we thought that there was a lot of potential to convert material assumed to be waste in a planned pit expansion to ore. And so we've consistently been able to drill 5 to 50 meter intercepts of, 0.3 to 1.5 gram oxide gold. That's going to have a tremendous impact of the economics when we update the FS at La Colorada in the middle of the year. And then Ana Paula, we continue to deliver very strong results from.
Well, Charles, what you mentioned about Ana Paula and some of the exploration work you did there, we got to talk about the results that you put out to the market on February the 20th. I mean, these are some nice hits, man. The high-grade panel, 161 meters at 4.26 grams per ton gold. There's a 30 meters at 10 grams per ton gold in there. There's 15.7 meters at 10.4 grams per ton gold. You also had a parallel panel and a satellite hit, which is pretty good, 24 meters of over 5 grams per ton gold. Talk to us about some of these really big drill hits at Ana Paula, just showing that this thing's a beast of a project.
Yeah, it's all come about from almost very simply a change in the drill orientation. People drilled because of the geology orientation from west to east, and we've worked out that the high grades controlled east-west. So we turn the rigs around and we're getting consistent hits as we drill. And so we're doing a combination of expanding the high-grade panel and looking to convert inferred into indicated for the FS study. So we're showing the high-grade panel is showing some great continuous results. And it's one of these deposits that the more we drill, the more we seem to find. You see these satellite zones, the parallel panel, this satellite hit we've had now 150 meters below the high-grade panel, shows there's a lot more gold here. So we've just got to keep drilling off Ana Paula. We believe that we'll keep finding ounces and high-grade ounces by doing that. And that's really the power of what Corey was just referring to at the start. The cash flow that we generate from the Colorado and San Augustine will allow us to bring on our flagship Ana Paula with considerably less to potentially even no equity dilution. That's a pretty unique business proposition. By the time Ana Paula's up and running in 2028, we as a company should be producing around 200,000 ounces at a materially lower ASIC than we are today. And to be able to do that with very little to no equity dilution is a pretty unique business proposition.
Hey, it is, but kudos to you for making that transaction with Florida Canyon to get those assets in to give you this near-term cash flow. Now, look, those drill results from the high-grade panel, they are very impressive, but it's what we've been seeing, right? The ones that stand out to me are these drill results that are outside of that high-grade panel. So that satellite hit that was 150 meters below, but also this parallel panel. Didn't have those eye-popping numbers, but it was 3 meters at 21.4 grams per ton gold. That's hole 319. Now, if you look at figure 1, it's hard to see how this is outside of the high-grade core. But you look at figure 3, all from a February 20th news release, you can see that it looks like there wasn't any mineralization there. I assume there was before, but how does this drill result, again, looking at figure 3, change the prospects of the high-grade core?
I think one of the things that the way we've added ounces at Ana Paula is we haven't volumetrically increased the amount of mineral resource. We're drilling within the broader resource footprint. The way we've done it is areas that were considered to be lower grade because the drill spacing was really wide and the resource model was conservative. We've been able to demonstrate continuity of high grade gold. So we're actually adding ounces by lifting the grade, which is the best outcome. So we haven't drilled ultimately, I think Ana Paula needs another $5 to $10 million worth of drilling to show, to drill these north-south sections across the ore body and really, really drill off and lock down how much of this high-grade material there is. But every time we do it, we get positive surprises, which shows you that the resource model that's there is appropriately conservative, and there's more upside under our nose to deliver. And the best part about it is that upside is likely to come with higher grade.
Well, Charles, when I listen to you talk about Ana Paula and just having watched this project for a long time since it's been in Argonaut's hands, into Heliostar's hands, it's really still the flagship of the company, is it not? I mean, it's a lot of focuses on these two new mines that are in production, which you're doing great on, but this is still the pearl of the portfolio, is it not?
Yeah, I'd agree with that assessment. You're talking about an ore body that averages 60 metres wide at around 5.5 grams per tonne gold. It's shallow. It's only sort of $10 to $15 million of underground development cost to get into. It can keep open really wide mining stopes, which means for a lower mining cost. And the initial mine life can access some very high grade material. There's a 200,000 ounce zone at better than 10 grams per tonne gold that'll come early into the mine life. If people want to do a back of the envelope, they can come up with some pretty eye-watering cash flow at the beginning of production for Ana Paula. It's not going to be as big as some 300,000 ounce a year producers in Canada, but I wouldn't be surprised if it makes as much money. That's the power of those widths and grades at Ana Paula.
So on the development front, as you mentioned, if everything goes according to plan, the gold price cooperates and production continues and ramps up at the already producing assets, you're hoping to not have to go back to the market to develop Ana Paula. What are the costs that you think that are going to be associated with this that we can kind of watch out for as you generate cash from those mines? Just how much are you going to have to plow into Ana Paula?
Yeah, to be very clear, we have not completed a feasibility study, so we don't have a formal guidance number. I think if you look at analogues around for comparison, you're talking something in the 200 to 250 million capital range. Ana Paula has a lot of advantages because it's got a lot of sunk capital already, the decline, the plant, power, surface rights, etc. So it's clearly not guidance on what the cost will be because we haven't done a study, but that's probably around the mark that you could expect for a mine of this size. And we would expect to project finance the bulk of that.
Charles, I'd love to get your thoughts in a general sense just on the valuation of the company right now, because when I look at Heliostar and see the way that it's valued, I feel like what you have at Ana Paula already underpins all the value that you have. It doesn't even include the new mines. But if you include the new mines, maybe speak to the part of the press release that you just put out where it's more of an accounting process, but the Mexican assets were revalued over 90 million Canadian, proving again it was a great transaction. But if you add those in to Ana Paula, and I don't think Cerro de Gallo or San Antonio are completely throwaway projects. I know you're not getting any value for those at present, but there's probably some value there to be had. But just with the two mines and Ana Paula, it still seems like there's room to re-rate higher because it doesn't seem like all this is factored in yet.
Yeah, some of the parts of our business are worth a lot more than our current trading valuation. And I think that's a reasonable concern, in the sense that we bought assets that appeared to be tied under the previous ownership. So there's kind of a, show me how you can perform differently with those. The other part is the gold prices move materially, which makes all our lives easier on showing that performance. And then we've been slowly starting to deliver key metrics by which people could judge us. We didn't have guidance previously. We didn't have technical reports showing the future for our operating mines. We've just put out our first quarterly production that we're discussing today. We're slowly putting the pieces in place where people could value us. And the big one that's missing is a simple way to value Ana Paula. And I think once we show people the value of Ana Paula, combined with the performance, the outperformance relative to people's expectations of our existing operations, you see a company worth a lot more than we are today.
What peer group does that put you in then, Charles? If you're estimating this year's gold equivalent ounces to be between 31 to 41,000 ounces, then Ana Paula coming online whenever that happens, what are the comparables company-wise that we can compare Heliostar to?
Well, I'll throw the question back to you. If we're producing 200,000 ounces at a below 1,500 AISC in 2028, that most of those comparable companies are billion-dollar companies. Now, we've got to get there and we've got to make sure we can do so. You've got to discount it as a shareholder to make sure that we can achieve those goals. But should we be able to do what we're planning to do over the next 2.5 years, we're talking about a true step change in our valuation to meet, all of the quality mid-tier producers out there.
It's going to be a fascinating road journey with you on, but I guess just for people that are impatient investors, Charles, they always want to know what's next. What are the key milestones, the key next steps that you want people watching out for from a news perspective or company milestone perspective over the balance of this year?
Yeah, I think there's a mixture of things that we control and a mixture of things that we don't control. Unfortunately, fortunately for people who want to see improvement in our share price in the short term or continued improvement, we're quite catalyst rich. We've got more drill results to come from La Colorada. We expect to receive permits from San Agustin and possibly even La Colorada in the first half of the year. We have the updated feasibility study from La Colorada in the middle of the year. And then we have a study in Q3 on Serra de Gaia, as well as some potential more drill results and studies from Ana Paula. So we're quite catalyst rich as a company. We've got a lot going on, but it boils down to maximizing the value of La Colorada and San Agustin to minimize the dilution to build Ana Paula. And if we can do that, we present a pretty nice return investment over the short and long term for a Heliostar shareholder.
All right, well, Charles, I'm going to be following up with you as all these drill results come out, the economic studies, and anything else that happens within this company now that you are truly a gold producer and a growing production story here with, again, your flagship project. Continuing to move that forward, but that needs to be funded with current production. So a lot of moving parts that you now have within Heliostar that are now contributing cash to the company, which is a great stage to be in. Again, chatting with Charles Funk, President and CEO of Heliostar Metals. Click that link in the show notes to visit the company's website. Charles, really appreciate this update today. Thanks for your time.